Hey, everybody. I got a lot of energy today. I'm in the zone. I am in the zone, Molly. And we have a full docket. You've been working so hard with our 3 producers, making these beautiful dockets. What's on the docket for today?
I know we have such a good show today. I have a lot of energy too. I played a little basketball on the street, like it was the suburbs
Street
on a
ball?
summer night with my child last night. And I
Nice.
woke up so refreshed.
I want to
So
get a little
refreshed.
street ball going. Now that I lost the weight, I could do
It's
that.
delightful. It really
That's
turns out I'm not good at that. Got a little practicing to do.
There's a little box behind the basket. Just put the ball into that box and you got a pretty good chance of it going in.
It's fine, up close. It's the further away I get, the harder it gets, turns out. All right. So we got a lot going on the show today. We're going to get to the crypto collapse. Don't worry. But first, we're going to dig into the creator economy, which is still red hot. YouTube Shorts has almost as many users as TikTok. And Twitch is making some changes in how they pay creators to stay in that game.
Got it.
And this is where we get to the bad news. The crypto contagion is continuing. Looks a lot like the actual Contagion movie at this point. It's taken companies out. We will give an update on the hedge fund 3 Arrows Capital. Yikes. Celsius.
I also want to check in on Saylor, the guy from MicroStrategy. He's supposed to have a margin call at 21, and I saw we dipped below 21 to 20,000. So I need to know if he got margin call, because that seems like that could take the contagion in a very dark place. And you know what? We can't get through a show without talking about the aliens. They're coming. Apparently, I mean, if 2020 through 2022 has not been crazy enough with Trump, the pandemic, everything, aliens. Apparently China thinks it has received a signal from a more advanced species than us. So it's going to get interesting. It's going to be a great show.
Stick with us.
Oh my God.
This Week in Startups is brought to you by Swag.com is the place to buy, customize, and distribute custom gifts and promotional products. They work with some of the best brands like Yeti, The North Face, Ember Mugs, and more. Visit swag.com/twist and use code TWIST for 10% off your order. Coda. Coda is the all-in-one doc for teams. If you've got a stack of niche workflow tools, or if you're buried in docs and spreadsheets, Coda is the doc that brings it all together. Startups can get a $1,000 credit at coda.io/twist. And Odoo. Odoo is a fully customizable and fully integrated suite of business apps that lets you build and scale your stack as you build and scale your business. Your first app is free forever, and right now, Odoo is offering $1,000 off your first implementation pack at odoo.com/twist. That's odoo.com/twist.
All right, we're kicking off today with something that is neither crypto nor layoffs, although we will get there. Do not worry. But there is, and this is just interesting, still plenty of heat in the creator economy, and YouTube is doing its best to catch up to TikTok, and evidently it's working. According to the Wall Street Journal, YouTube Shorts, which felt a little bit like one of those Facebook copycat things, is evidently gaining ground on TikTok. Google disclosed that YouTube Shorts had 1.5 billion monthly active users out of its 2 billion plus monthly users. So that's pretty much the size of TikTok now. Third-party analysts estimate that TikTok is about 1.6 billion monthly active users. So Google just using that scale and apparently creator lock-in to be like, no, we're not having it. Bat them right out of the sky.
Yeah, I mean, TikTok is at 1.6 billion monthly active users, but obviously it's owned by Bytedance. They are based in China. They are banned, I believe, in India and some other countries, and they should be. I know people love the product. The product is quite addicting. It's very elegant and, got a lot of great features. But honestly, now that YouTube's got this up and running, I think the government needs to really think and hold the Chinese government to reciprocity. If we allow TikTok here, they need to allow YouTube there. And if they don't allow YouTube there, we need to turn off TikTok here. Because, there's all these rules we have for companies here that the United States companies have to play by. And, China doesn't have to. And we have no ability to enforce any of those rules. We don't know what they're doing with user data. They're not going to be listed on public markets here in all likelihood, if Didi and the other companies. So Molly, do you think we should even allow TikTok in this country if it's being used by a communist country to spy on our citizens?
Well, in the interest of journalism, I should say that TikTok claims
Okay.
that its servers for its US product are located in the United States. There's an American CEO.
Okay.
And that the data is not being shared back and forth.
Yeah. You believe that? Knowing what you know about the Chinese government, do you believe that? Chances that's actually true.
Definitely not. However,
chances
I
are
feel
0%.
like I should at least say that they do claim that. God, it's such a hard question because on the one hand, yes, that all makes sense. And we don't, and the data collection is extreme.
Yeah.
On the other hand, the data collection is not any more than US companies are doing. And TikTok has come along as basically the only real competition that we've seen in a long time that has potentially forced some better behavior, maybe, by some of these other giants. So I'm really torn between my sense of the importance of competition and this sense of like what is so far a very undefined harm, right? Like even the harm is undefined in some ways. Well, it is undefined. Like what could China do with this data?
Oh, great question. So what China could do with this data is they could know the location, and they could have access to the camera rolls of every person in our government's children. And then they could use that to do corporate or espionage, where they could use things that are on a child's phone or a young adult's phone to then blackmail the parents or that young adult. And if you've watched The Americans, the amazing AMC TV show, which goes into, Russian spy techniques, it is incredibly easy to compromise a person. All you have to do is have compromat on the person. And so they could easily get compromat on anybody in their system. And the idea that the CEO here in the United States, claims the stuff's on a US server, when things get backed up to some third party, to some other server, or reports get made, you don't know what's going back to the Chinese government. And the Chinese government has the keys to the kingdom in these other Chinese companies. Why would they make an exception with this one? And then there's also the algorithm programming our kids. So if they're programming our kids to be, against American ideals or values, who knows, or just be distracted and not focused on their careers, science, and technology. I know this sounds crazy, but PsyOps is a big part of, international spying and warfare. And they can basically program our kids. Video programs people. We know that. So how they, program the algorithm, they could take things like, let's say the Russians did, gun ownership, abortion, slavery reparations, and race in the United States. The Russians were using those specific topics to create division between Americans. In fact, I think correct me if I'm wrong here, the entire protest with those tiki torches, I believe it was that one. Somebody fact check me if I'm wrong. But there was a lot of evidence of them creating Facebook groups and sending either side of one of those contentious issues here in America. Right. And they were sending people to it to create and ferment this division in our country, which then distracts us and makes us look terrible on a global stage. So they can do that just like the Russians.
100%. To be fair, all that happened on Facebook and kind of still is. So, in terms of perpetrating that specific harm, TikTok might be a more targeted weapon.
And they have more
easily accessible, and they have more control over it. But all of that is definitely still happening on Facebook. So but the Chinese don't control Facebook, the platform, or the algorithm. Right. You can be sure that algorithm, if the Chinese government wants to have influence on that algorithm, they can. The US CEO wouldn't even know. Yeah. The US CEO wouldn't know. They could have 20 people working there who also have worked for the Chinese military. They could be doing all kinds of ops. Remember, as you're saying here, Molly, even American companies can get infiltrated. We had people from Saudi Arabia who had infiltrated Twitter. So they were working there and they were getting information. I think even DMs, and somebody can fact check me on that one as well. But there was that story of they were getting account information back to the kingdom. Yeah. That's incredibly dangerous, especially if people have anonymous accounts. So to your point, Molly, if foreign actors can infiltrate Twitter and Facebook and do that effectively, what can they do with the platform they fully control? But back to YouTube and how much money this is making and how big this is.
this to me seems like a no-brainer for YouTube to win this race, because if you're a creator, you're maintaining two accounts, which means you're maintaining two different sets of follower accounts. And, if we have X number of people, we have 298,000 subscribers here on This Week in Startups. I think All In has over 200 as well. So, you're not starting from zero. So every creator who hasn't started their TikTok account, well, and there's probably more that haven't really invested in TikTok because they're busy over on YouTube. Well, now they're going to start at YouTube. And where you originate your content creation is super important. Getting people off of TikTok and then getting them to post again to YouTube, that's hard. But getting the people who are already on YouTube and saying, hey, here's your new feature is great. My question is, why don't they have a YouTube Shorts dedicated app for just creating and just consuming? There should be a dedicated app just for this. And they should just do Shorts. And they should make it YouTube Shorts. So if you want to waste time and just do that, you can. And then if you want to see the other longer form videos, you click and it opens up YouTube. So now you get two swings at bat. Where's the Shorts app? Do they have one?
I don't know, but that is so smart. I mean, that's how you take out TikTok. And then you can, if you're the government, you can ban TikTok without starting a youth riot, because that is what would happen now. But if you're like, oh, there's this alternative here and there's this alternative over here, and that's fine. Yeah. Absolutely. I mean, I love that idea. It feels like that might be coming or should arrive now that they have shown this success already with Shorts, because lumping it all in is hard. It's
just hard to find. It's hard
YouTube
to find.
Still, honestly, YouTube's Achilles tendon still is
Achilles heel.
It's Achilles heel. Thanks.
Yeah.
Is
which I think the Achilles heel is actually a tendon. It is a tendon.
That's what it means. Like nobody ever says Achilles tendon because heel sounds cooler, but what it really means is you cut that tendon, you can't walk anymore. You're done.
Yes.
As we know all too well.
Oh, poor Clay. But he's back. He had a good game.
He's back. Yeah. I'm just still, it's just PTSD. Just PTSD.
Yeah. A lot of PTSD. Yeah.
I can't even remember what I was saying. Oh, their Achilles heel still is interface. Like YouTube is still just looks like crap. It's like Amazon. Like, why is it such a crappy Craigslist, experience? Amazon.
I think it's because you can navigate around it so easily that changing it is just too high risk. It's just too high risk. I am surprised none of the larger sites have been able to make a YouTube competitor. It seems to me that it would be possible to build a YouTube competitor, but I'm surprised people haven't. I will say, get the YouTube Premium. Do you have YouTube Premium for whatever bucks a month to take the ads out yet?
So still this is really funny because every time my son makes me watch a YouTube video and an ad comes up, I'm like, why don't we have YouTube Premium? And then I never sign up. It's just a time thing. It's just a dumb.
I think it's youtube.com/premium. I hate to do a free ad for them, but I think it's as simple as that. And there's a family plan. So I'm getting the family plan. And then because I just got new iPads for the 6-year-olds. And so now I'm going to have everybody on ad-free services because I just don't want them programmed by all these ads. Then your kids start coming to you asking for weird stuff. And it's just better to not have them on that consumption train. So
/premium. I'm opening it up over here. Anyway, it is deeply fascinating. It's cool to see this competition, especially since, Instagram, I think Reels has been like, okay, but people don't like it. It's like Reels story is for the olds.
Yeah, Reels I'm starting to hit more Reels and I find myself swiping through 3 or 4. So I think and I keep getting upsold. I'm not verified. I just asked to be verified on Instagram.
Dude, I've asked like 30 times to be verified on Instagram and they just ignore me.
Did you do it through the interface?
Yeah. Oh, yeah.
Yeah. So I just did it through the interface because people keep making crypto accounts. And so they're sliding into people's DMs like, hey, it's JCal. Want to send me a Bitcoin and I'll send you back 2? And I'm just like, is anybody who falls for this? But I kind of need one now. If you like delighting customers and your employees with amazing swag, well then swag.com is the place for you. It's the best place to buy, customize, and distribute custom gifts, as well as promotional products. Because Swag only carries items that people actually want to keep. They've curated an amazing collection of the best products across categories like tech, apparel, drinkware, office supplies, and more. And they offer some of the best brands in the game, like Yeti, Contigo, my favorite, Moleskine, another one of my favorites, Ember mugs, I love those, and so much more. And remember the last time we told you we're building out the Twist swag bag? Well, I asked Twist fans for some ideas. And Twitter user Freed Ventures replied with a beautiful corduroy cap. I love those. So if you have any swag bag submissions, go to swag.com and find your favorite item. And then tweet it to TWI Startups or email producers@thisweekinstartups.com. You might just win. that piece of swag. I want to give you 10% off your first order. I'm not joking. 10% off. It's going to be big money for you. Swag.com/twist and use the promo code twist for 10% off. The thing that's incredible is the revenue story for Bytedance. This is new information to me because the ads on Bytedance are terrible. I would never click on any of them. I don't think they provide any value, but apparently I'm wrong. Has anybody in the we're on the YouTube chat live here with 342 people watching the show live at youtube.com/thisweekin. If you want to join us every day, 10 a.m. Pacific time. Has anybody ever clicked on an ad? I'm just asking the Noti gang, people who have notifications turned on, Molly. Has anybody ever clicked on an ad at TikTok and bought something? Or seen an ad on TikTok and bought that product or used that service? I have never done that. I don't get the sense that the ads work, but apparently, am I correct that they hit 10 billion in revenue?
More than that, I think. Well,
year 3.
Bytedance's 2021 revenue was $58 billion.
That's all
YouTube,
of Bytedance.
That's all of Bytedance. So that's not necessarily broken out by TikTok. And that's the hard one to see. This chart is revenue over time after hitting 10 billion in revenue. Bytedance, it looks like, hit that 10 billion in year 1 of its existence. Year 3?
Oh, no.
No. Year 3, it's at like almost 60.
Yeah, that's crazy.
Yeah. And it's revenue. I mean, and again, Bytedance is made up of a lot of different things. And in fact, in China, it's not even called TikTok. It's like an app by a completely different name. And there is much more of a live stream shopping culture in China.
You know what this chart is? This chart's an interesting chart. We should pull it up here to share with the noties. This chart is, once you've hit 10 billion, who knows what year that is? That would take like 5 years or something. But when you did hit 10 billion, what happened after that? So the slope after 10 billion is what this chart. So year 0 here is not the year that Amazon, Apple, Google, and Microsoft started. This is just their growth curve. So you see, Microsoft just grew slow and steady after they hit 10 billion years, the next 5 years after hitting 10 billion. So that was probably in the 80s, right? Or maybe early 90s. Mm-hmm. And Google, you see another slope, tripling in 5 years. Microsoft basically doubling in 5 years. And then you see Amazon quadrupling or more. Tesla going 6x since hitting 10 billion. So this is the slope after hitting 10 billion. So this is hyperscale, right?
Right. And Bytedance's slope is bananas. As of May of this year, so last month, there was a story saying that TikTok is on track to triple its ad revenue this year, surpassing the revenue of Twitter and Snap combined. Yeah. Only TikTok, not just Bytedance. Its ad revenue was going to triple from 3.8 billion in 2021 to 11.6 billion in 2022. Wow. 200%.
That's nuts. See, here's the thing. Those numbers don't lie. You can't hit 10 billion if the advertisers are not getting value. Yeah. Right? Like they must be getting some value. It's not a fad. And I think this is where I was wrong about Facebook. I thought Facebook advertising was going to be DOA because who wants to have an ad between like a conversation and photos of people? And I was right because the ads got so few clicks. Mm-hmm. The click rate was like a 10th of the ad, or maybe a 50th of the ads getting clicked on Google. Right. So when compared to Google's click-through rate, it was absurdly low. So we all thought in the industry, social media advertising is going to suck. What we didn't realize was, oh my God, people are spending a lot more time on this social network than they are on a Google search, right? Google search, you get in and out. The better a job Google does, either advertising or organic results, the quicker you leave Google, right? If you're hanging around Google search, it means you didn't find what you want and you're still going through the menu, right? Mm-hmm. With social media, you are just spending hours and hours on there. So therefore, even if it has a lower click-through rate, you're going to get a lot more time and you're going to understand the person's psychographics, a fancy way of saying like what they think about and what they're into, their hobbies, their interests.
The targeting is going to be so specific.
Yeah. Over time, we underestimated what the algorithm could do in serving your next ad or serving ads to your friend group. So if one person in your friend group, let's say our friend group, Molly, like somebody's talking about, I don't know, podcasting microphones, and you and I are friends, and Tom Merritt's in there, and Kai Risdall's in there, and Joe Rogan's, in there. And it's just, an orbit of people on a social graph. It starts showing the ads to our friends. Well, we have friends who are in podcasting or in radio, and all of a sudden those ads perform better. And it's all because one of us went to the Facebook page for, this new podcasting microphone.
Yeah.
And then it's like, okay, if you went to that page and you spent 3 minutes on it and you interacted and asked 2 questions on it, let's try the 100 people you're closest to. Oh, that worked. Let's try the 100 people each of them are closest to. And all of a sudden you have the graph of every podcaster in the world.
Yep.
And nobody knows how it happened. It just happened magically through the app. I mean, just think about how revolutionary that was. And we all missed it in the industry.
It's terrifying. And
Sheryl
that is
Sandberg
why
got it.
Yeah. Oh, yeah. 100%. The value of the social graph specifically. Like they used to talk about the social graph and it would be like, blah, blah, blah. I don't know what you're talking about. And what it really meant is exactly what you just described.
Yeah.
That you will start to get ads that feel like they read your mind.
Exactly. And this is why people think their phone is being listened to. Because we might all be at a party and somebody starts talking about, hey, this new podcasting microphone that, uses USB-C and it's great for travel and it whatever, has battery life and you can take it on the road. Well, it sounds like a pretty good microphone. They should make one. Imagine if you had a podcasting mic that had a battery in it and it was USB-C and you could just take it and do field reporting with it. That'd be kind of dope.
I want that.
I kind of want that.
They do have that. A company called Yellow makes it.
Really?
I got to use it at Marketplace. Yep.
And does it record like on a chip right into the microphone as well?
Yep. It's just an all-in-one portable microphone, records right into the device.
I have an even better one. Put Wi-Fi in it and put a little camera in it and then let me use it for man on the street. Sorry to use a sexist term. What's the other term that's a fancy Latin term that you use?
Vox Populi, Vox Pop.
Vox Pop. Thank you. For that
Yellow
person on the street, imagine person on the street where it would live stream it. So it had a EVDO, it had a 5G connection in it. Now I could be interviewing people on the street with a microphone and it would be recording it in high fidelity with a camera in it. That would be a great device.
That would be amazing.
All right. Anyway, I'm sorry. But anyway,
Yellow
we would be talking about
that.
Mic,
by the way. We would be talking about that.
We would be talking about that. And then we'd think, and then we'd see ads. And it wouldn't be that we saw ads. It'd be one of us went on our phone and searched for it. And then everybody else was in the social group. And then we all got the ads in the next 24 hours.
Right.
So just so you know, that's working.
Or someone somewhere in the world who was connected to podcasting groups had bought that microphone and it was like, oh, I noticed. I mean, it's actually way worse than it listening. It's like, oh, I noticed that all these people in the same social graph were in the same location because it knows our location.
Yes.
So I see that a bunch of you were just at a party where I can infer that you were probably talking about some podcasting. So let me pop this ad up immediately because you're all in the mood.
Yeah. If you're a startup, you have to save where you can. I'm talking about time and money and your bandwidth. That's why we love Coda. Coda is one doc to rule them all. And here's a quick example. My guy Presh just made a beautiful template for investor updates. Yes, if you're a founder and you have investors, you want to update them, especially in these uncertain times, so that they can support you, maybe invest a little more. How do you write an investor update? Well, we got you covered. Go to thisweekinstartups.com/investor updates and use my template. Coda has tons of templates waiting there for you for almost anything you want to do. Coda works right out of the box. It's totally customizable, and your text and your tables can live together in the same document. This means all your valuable data, your objectives, and your strategies are all in one place, and your team is literally on the same page. You can onboard new hires quickly from anywhere because they get to see all the best practices, and you're going to react quickly to all the changes that will happen in your business. Join the productivity revolution and sign up for Coda today. Head to coda.io/twist and you'll sign up and get $1,000 in credits. I kid you not. coda.io/twist for $1,000 off.
That is what is happening with YouTube and the TikTok competition. And also, while all of that is happening, Twitch is trying to get in this game in an even more real way. Keep creators on its platform, keeping them from bailing to YouTube. Twitch is expanding its ad incentive program for creators to be exactly in line with the YouTube split. So earlier this year, Twitch, I think, had not even been paying creators. It was like you can make money with merch or tips or sort of real-time donations. Earlier this year, Twitch started paying a flat, like a cost per mile, just a payout for 1,000 ad impressions.
CPM is the classic term for this in advertising. If folks haven't heard of it, CPM, cost per M being 1,000 in, was that Roman or something?
Oh yeah, not cost per mile, sorry, mille.
Cost per
mille.
Yeah, cost per
thousand.
Yeah.
So anyway, it was paying a CPM to Twitch streamers. So if you got, 1,000 ad impressions, you'd get a certain amount of money. Now they're switching to the split, the 55% ad revenue split on the ads, and then letting more creators join that program and have that opportunity to get paid, which to me shows both growth in creator interest on Twitch, but also Twitch's realization that if they want to stay competitive, you have to pay creators. This is actually one of the big knocks on Instagram and Reels is they really don't have much of a creator or haven't historically had much of a creator focus. So that if you were an Instagram star, you were only making money on external deals and merch, not an ad split.
Yeah. This is a strategic mistake on Amazon's part. If YouTube gives 55%, it costs them nothing to give 60 or 65%. So why not make it a 10% better deal? Why would you go at the exact split? It costs you nothing to do 60. Or what they could say is, we'll give you, this is what I would have done. I would have said in year one, we're going to go at 90% for creators. And then we're going to go down 5% a year. And then we're going to wind up at 70-30. So we really want, for the next couple of years, to really incentivize you. We're going to give you the overwhelming bulk of the revenue. We're just going to cover our costs. And then we're going to go down 5% to what we think is a sustainable split of 70-30. This is what Facebook should have done.
So smart.
Or Twitter should have done. Twitter never really opened up their ad, sharing. They do put ads in front of select people like, CBS or something. Their videos, those pre-rolls. You've seen them on Twitter?
Yeah, totally.
As a verified user, we don't get as many ads. So I go to my other account at Jason Calacanis, my full name, and I check there to see what the ad mix looks like. But I think you get a lot more of those ads.
Yeah, no, I think you make an excellent point that there was a chance to actually not just win high profile streamers back, because a lot of them have left. They either left for YouTube or like Ninja went to Mixer, which then up and died.
Yeah, they gave Ninja like 100 million or 50 million. It was some crazy deal. And then they shut it down and had to pay them off.
Yeah. Yikes.
Crazy.
But so all these creators left, so you could have potentially gotten them back. And then according to Surge Dog, one of our noties watching us on YouTube, he said, I saw a ton of Twitch streamers complain that this would actually lower their earnings. Because if you have a really, really high CPM payout, because you got tons and tons of viewers, then this will actually... So on the one hand, great that they're giving more creators more opportunity to make money. But if it's a pay cut for the creators on the program and they're already pissed, that's a miss also.
Yeah.
Come on, Twitch, get in the game. No pun intended.
It's hard when you're owned by a big company to actually be aggressive, because you have a bunch of middle managers running the place. They all report into somebody. They all have, some TPS report or some North Star metric, and they have to get levels of approval. I'm not sure how independent Twitch is, but they set up YouTube to be highly, independent. And Susan Wojcicki is, CEO for that reason, so that they can make their own decisions. This feels like they're not being aggressive enough in a really aggressive environment. They should be super, super aggressive, and they should make the ad deal much more aggressive. But okay, it's nice to see all this activity supporting creators. And this is one of the things, just when you think about employment in the world, one of the great things that's happened in America specifically is we keep, with this incredible creativity and entrepreneurial spirit we have in America, we keep coming up with new ideas for jobs.
Totally new economies.
Yeah, it's like
so cool.
There's a whole group of people. It's probably now, there's probably 1 million people in the United States, or 500,000 people whose job is to work on a podcast, right? There are 8 or 9 people working on this podcast. So there are 9 people employed, over the last 12 years. We're going to hit 1,500 episodes soon. Gonna have a party for that, 1,500th party.
Let's do it.
So anyway, just think about that. And then you think there's people who are getting paid to play video games. And then think there's people who are getting paid to make short, funny videos where they do 30-second dance moves. So dancers, that was known as a terrible job, right?
Yeah.
Like, for everybody who wanted to get paid to dance, like, you could be on tour with Madonna, or you could, I don't know, New York Ballet, and nobody shows up. And like, dancers didn't get paid a lot of money. I mean, maybe there's a category of dancers that get paid a lot of money, I understand. But putting that aside, adult dancers.
Yeah, you did not. You really, you could have just let it go.
I'm trying to think about the entire economy.
Red flag. Red flag.
Okay. I'm not. Don't call HR, Molly.
If you know what? If you let
I knew that was coming when the grin started to show.
you can totally see it.
Well, Molly, here's
a tip for you. I call it the 9-year-old test. If you don't specify it, then you pass the 9-year-old test because they're not going to. You don't have to like put
There's
a
all types of dancing. Okay. This is Molly. She's like, I said, I'm calling HR. Beep beep boop.
Beep, boop,
Hey,
boop,
it's Jake Al.
I'm like,
it's
here
Molly.
it comes.
I'm calling HR.
Nice.
Jake Al brought up strippers on the show.
I mean strippers.
I'm literally talking about strippers here. But anyway, if you look at dancing, there are more people being paid to dance on YouTube or other platforms. I guess people don't get paid to dance on TikTok yet, but they probably have other opportunities to monetize.
I mean, if you're Charlie D'Amelio, you make nothing
merch
from TikTok, but you get like a show.
Charlie D'Amelio, the highest earning TikTok creator in 2021, according to a report, is raking in approximately $17 million. And her sister by Forbes.
They're the new Kardashians. Like this family, the D'Amelios, is the new Kardashians. Like they've got like shows, and there's like she's 18, her sister's in on it. Like it's a whole. Oh no, my son showed me Charlie D'Amelio years ago, and I was like, I feel uncomfortable. And
no,
I mean, she's a dancer. She's a good dancer. Like it's not like the thing that you're talking about.
Yes,
but it's also.
These are very provocative dances. Just as a parent, at what age do you allow your kids to have a TikTok, Molly? That's for people who are in the chat. What age should a kid be able to publish to TikTok? I mean, most people say get a phone at, I think the age I'm told is 14 or 15 is when people get their mobile phone.
Oh, really?
Yeah. Some people get it as young as 12.
According to COPPA, the Children's Online Privacy and Protection Act.
Okay.
13 is the age at which kids are legally allowed to create their own accounts. Before that, they cannot.
They can't create their own account.
They're not.
And creating an account means you can then make content and share it with the world and potentially go viral.
Right. So at 13, I let my son create social media accounts that had to be private.
Got it.
He's not allowed to have public accounts.
Okay. And then public accounts and posting to them at what age? I see in the chat, people are saying 14, 18, iPhone at 7. Oh, that's way too young. Yeah. This is what I'm trying to figure out. Like I am, I have 3 daughters and like all their friends are talking about TikTok or TikTok comes up and, I'm not a square and I would say in the technology industry, but it just feels like far too young because your frontal lobes, we've talked about this before on the program, Molly, are not fully developed until you're 21, 22, 23. Yeah. And if you publish something on there and it's inappropriate and then it goes viral and then you become known by it, like this could have serious repercussions.
Yeah. I mean, one thing I do appreciate about like my son and his cohort is that they seem to really, really understand the value of ephemeral posting. Like they're into the platform. They do stories, they delete all their Instagrams. They don't have a like corpus of digital life. Like if the internet had existed when I was growing up, career over, right? Like, and I'm extremely mild, relatively speaking. And they just they seem to sort of innately, they're not trying to build up an archive that future employers will be able to search. They're sort of sharing with their friends. They're doing a lot more in group chat. They're doing a lot with stories and disappearing messages. And I don't think that they don't show the past, if you will. I mean, my son will post a couple things to Instagram and like delete them all. I'm like, oh, it's just not the same. It's not the same usage pattern. So I sort of feel like applying our version of how we interacted with social, like they're growing up with it in a different way and growing into it in a different way that I think is interesting to watch. Not that it can't be damaging. I just think it's very different how they use it.
Yeah. I'm just concerned about young people creating content with the potential of it going viral. And then you become famous at the age of 15 for something. And then I don't know, what trajectory does that put you on in life? Like it could go either way, right? Like if it is something super positive, like, there's a YouTube channel where a kid unboxes toys. Do you know about that one?
Oh yeah.
And my kids watch it sometimes and it's become fabulously famous, but this kid was very young. And I was like, my kids wanted to do like, hey, can we do unboxing videos? I was like, yeah, sure. We can do an unboxing video. And I was like, we could make one of those and we could just watch it on our iPads. I wasn't going to publish it. Ryan
Toy review. Ryan Toy's review. Yeah. And that's been there've been like really upsetting stories about his parents hoarding the money. Like it's a little bit of there's a lot.
Yeah. I guess there are maybe this isn't a new thing. Like there have been child acting laws,
exactly.
Right?
It's all the same stuff. I mean, it really is all the same stuff. And if you're putting your kid up for clicks because they're, and your pets and all of those things, it is what I realized covering the creator economy is it's all the same. It's agents, it's like marketing deals. Are you trying to get into Target? And it's the same tiny number of people who get really, really famous and make a lot of money as it's always been. Just a different platform.
It's so interesting. I just did a Google search for Ryan's toy reviews and literally the drop down was like child labor. So yeah, I think, this is interesting. Yep.
It's all evolving like right before our very eyes.
One of the producers said, it looks like just a cursory research online, $29 million for Ryan's toy reviews in 2019. So if the kid then winds up with tens of millions of dollars in a trust fund, is that a bad thing? I'm not sure. I guess it's okay.
Depends on how screwed up he is, right?
I would like to, if just notice, and maybe for the producers, I'd like to talk to a child labor lawyer / person who does this, or maybe an agent or somebody who's an expert on this. I think it'd be an interesting topic, right?
Yeah.
Like how do they advise people doing this? Because again, to my original point, pretty great that we're creating all these jobs, but it's almost like it's too easy. And you could have kids, becoming famous or creating businesses. I don't mind them creating businesses, but I'm concerned about the fame thing. Like, what does that do to a young child's mind? And it's a different level of fame. It's a global level of fame, right?
Yeah.
It's not like being on like a TV series level of fame. It's like probably 100x that.
And it's pretty the intense. Comments and the
comments.
Yes. Yeah. I mean, hopefully they're being protected from that, but.
Oh, wow. 32.6 million subs. Listen, right now, being capital efficient and extending your runway is more important than ever if you're running a startup. And one easy way to cut costs is to run all your SaaS apps on one platform. And for that, you need to check out Odoo's amazing suite of business applications. Using Odoo means you won't have a bunch of different SaaS subscriptions. Everything you need is already on Odoo. All you have to do is turn it on when you're ready, and then they'll only charge you for the apps that you're using. And they have over 40 main apps and over 16,000 apps from their open source community. We're talking about sales, accounting, marketing automation, HR, website builders, and so much more. And this will streamline your business. No more issues transferring data back and forth from one platform to the other. And you'll have only one customer support contact across all of your apps, not 20. And here's the best part. Your first app is free forever. And Odoo is offering a $1,000 credit on your first implementation pack. Go to odoo.com/twist for $1,000 off. That's odoo.com/twist. And by the way, congratulations to Odoo for announcing a huge new round of fundraising. Well done. It's breaking news.
Breaking news, everybody.
The Federal Reserve approved the largest interest rate increase since 1994 and signaled it would continue lifting rates this year at the most rapid pace in decades as it races to slow the economy and combat inflation that is running at a 40-year high. Officials agreed to a 0.75 percentage. We knew that was a possibility.
Yep.
Rate raise at the 2-day policy meeting that concluded Wednesday, which will increase the Fed's benchmark federal funds rate to a range between 1.5 and 1.75. That's a good thing, right? I think.
I guess
so. I guess the goal is to slow spending. This just feels like we're slamming on the brakes. We floored it. Just feels really.
I don't know. I'm curious about this, right? Because like there are definitely some people who are saying, okay, this is good. It's going to show that the Fed is taking this really seriously. Immediately after the news, the Dow is up a little bit. The S&P is down very slightly. I think that this is probably
what 1%. Yeah.
Yeah, this is sort of what like markets were saying that they are fine with.
Yeah, they expected it.
I also and they expected it and they're happy because it doesn't prolong things in their minds. What I don't know is how, this also makes like housing even less accessible. It isn't going to do anything about monopolies that control baby formula and tampons. It's not going to do anything about the war. It can't deal with like China's COVID policies. Like we had already, even before the pandemic, entered a phase where the Fed's tools were somewhat limited. And there was even like a piece that was just like, look, Amazon controls pricing more than the Fed at this point.
Yeah,
and I just am like, is this just going to put money out of reach for Americans who are already suffering, but not do anything about the underlying things that are causing this disruption?
I guess if less people are trying to buy a good or service, the price comes down. So if you get rid of the demand side, so you don't have as many people originating mortgages, you will have less competition for homes. And that's like a really peculiar environment because you have with homes a limited supply. So that's also distorted. But I guess the theory here is we're going to try to get inflation to slow down. And I see it everywhere I'm going now. People are talking about the price of things and they're adjusting their behavior accordingly.
Yeah. It assumes that the price of things is really just controlled by supply and demand, though, right? Like the price of oil and baby formula and apparently tampons is not a free flowing supply situation. It's like a couple of companies control that. And if they screw up their factory or they decide to turn off production or, now you have Biden literally being like, I guess I'll meet with MBS, even though he chops people up. And I said I never would, but we need oil. Like it's just
wait a second. It's looks like NASDAQ is in the green right now. This looks like hasn't changed the NASDAQ for the day. The Dow was at a stronger position at the start of the day. It's come down a little bit. Yeah, it's basically flat now. So interesting. It's not red. The only thing that's red is crude oil is down 1%. So interesting. It's going to be a lot to work through. But let's work through the rest of this docket.
Let's do it, because we still have a bajillion stories, probably more than we're going to be able to get to.
Should we skip the phone and do that tomorrow? Yeah. I think the crypto stuff everybody wants to talk about. Crypto. Yeah, this is just getting crazy. We tried to put off the bad news, but we did. Man, here we go. It is a contagion, right? I mean, I think that's what we're seeing now is the word contagion is important because it means when things start to go bad at one company, there is some kind of effect to other related companies. And I talked about this, 3 or 4 months ago with the layoff contagion. We now see the layoff contagion has absolutely happened. Every company is just making the cuts. Whether they need to or not, they're like, look, everybody else is doing it. We should do it. In fact, I think Brian Armstrong kind of pointed to that. Look, everybody else is doing this. And I was on 2 board calls yesterday. On both board calls, we were talking about Brian Armstrong's letter. So that is a full-blown contagion. And now there's another contagion happening in crypto. So let's talk about what we saw today.
So let's start with the biggest ones. This is, talk about contagion. I would even argue that this is just an accelerating collapse at this point. There's a hedge fund calling itself Three Arrows Capital, styled as 3AC. According to an article published this morning from the crypto news site The Block, 3AC had close to $10 billion in crypto assets under management at its peak. And it may now, due to margin calls effectively and calls on money it was holding, may be on the brink of insolvency. We've seen estimates higher and lower than the $10 billion. Three Arrows Capital had raised separate funds for venture investments in Web3 companies, somewhat like A16Z's specialized crypto fund. Its larger holdings, I am sorry to report, included Terra and Luna, which
went to zero.
I think went to zero, right?
Yeah, I think it's insolvent is the last I checked. I know they were trying to resuscitate the corpse, but I think essentially dead. Yeah.
Ethereum, which is down 50% over the last month. Avalanche, which is down 57% over the last month. That's a smart contracts layer 1 platform that's been focused on speed. Polkadot, which is down about 39% over the last month. That's a layer that provides interoperability between different blockchains. The tweets out from 3AC have included things like, in the process of figuring out how to repay lenders and other counterparties after it was liquidated by top-tier lending firms in the space.
Was that by 3AC or is
Sorry, that was not a tweet. That was an article published this morning from The Block.
Yeah. Okay. So according to The Block, 3AC is currently in the process of figuring out how to repay lenders and other counterparties after it was liquidated by top-tier lending firms in the space. So they must have had loans against their crypto.
They did.
Which is what all these folks are doing. This is like such a high-risk maneuver to get levered up, because when things come down, so you're basically taking, for people who don't understand leverage, sometimes people will give you like twice as much money to invest, and they'll use your Bitcoin, or whatever cryptocurrency you own, as the collateral. So you have twice as much money to spend, so you can buy twice as much Bitcoin. And if Bitcoin comes down, at a certain point, they liquidate you because you owe them the money. They liquidate you, Bitcoin goes down because there's more sellers than buyers. And that might be what's happening right now, is a bunch of people were levered up and now they're all getting liquidated. And that's why we saw Bitcoin just plummet to 20,000 and change.
Yeah, I think that's exactly what happened. Sources, according to the block, declined to share the names of the firms, the lending firms that liquidated, on the record for fear of reprisal. But 3 people said the liquidation totaled at least $400 million. They added that the firm has maintained limited contact with its counterparties since being liquidated.
Wow.
Yeah.
Yeah.
Yeah, there was a long thread from an anonymous crypto account, Hold Kryptonite, with 20 tweets. And it's sort of like you never know what's real and what's not. And yet at the same time, people, people in the crypto space are unbelievably informed sounding about basically financial basics. Hold Kryptonite claims these lenders are unprepared for a collapse of this size, much like Celsius was. They claim lenders will withdraw credit by recalling outstanding loans, forcing even more large liquidation of coins, and that we might see the price of Bitcoin go below 10,000. 10,000 again.
Wow. There are a lot of anonymous
there are always a
accounts.
lot of anonymous tweet threads
in
the crypto world.
This one, and so just in terms of like when we cover something that's anonymous on the program, if this thing has trended, then, I think talking about it with the major caveat of like, this seems informed, and it's trending and everybody's talking about it. But to be clear, who knows? There could be all kinds of agendas here. Like this could be a competitor to 3AC,
Totally.
There's all kinds of FUD. But if something does rise up to going viral, now it's become a story. So you don't want to cover rumors or anonymous accounts, but you have no choice but to cover them in this new crazy world. I think it's not perfect.
It's so hard to get information, right? It's all so opaque. And these are private companies who are also doing incredibly complicated financial maneuvering. And so sometimes you look wherever you can. Will Bitcoin go below $10,000? I don't know.
Nobody knows.
It's hard to imagine that. But at the same time, like even just this week has gone on, it's getting less and less hard to imagine anything.
Yeah.
Okay.
So, but straight from the horse's mouth, 3AC co-founder Zhu Su, he is ZHUSU if you want to follow him on Twitter. He just says, we are in the process of communicating with relevant parties and fully committed to working this out. That is super squirrely, like working what? And it's like no details, but I understand, like this is unprecedented times. And so this is why regulation exists in financial markets. This is why anonymity does not exist in financial markets. This is why there are rules of the road. This is why, different countries have different controls in place. And, we clearly do not have enough controls in place in crypto. We knew that this could happen. And here's the sad part. Who's going to get burned. It's going to be retail. It's going to be people who, heard about this from their cousins, brothers, sisters, roommate. They heard about a new project. It was going to the moon and, they bet too much. If you were betting, as I always say, if you're betting 1-2% of your net worth and you can afford to lose it, only bet what you can afford to lose, you'll be fine. If you start betting, things that are a significant portion of your net worth, you really have to think it through. And you always, of course, need to be diversified. So if your house is 50% of your, if your house and your retirement account are 70% of your net worth, and then 30% is in alternative stuff, you own a car, that's a classic or something. I think there's some logical Molly blend of these things. The problem is people were pressured into making these investments. Yes. And this is the thing that I complained about, and people gave me a hard time about it because I was like, listen, don't be toxic. Don't tell people have fun being poor. Don't create 50 accounts and be Bitcoin the Bitcoin toxicity movement, all this stuff is just too dark. And,
and look, these companies 100% presented themselves with a financial veneer. And a financial veneer makes people think that their money is protected. I mean, I remember having to convince, almost to the point of yelling, a marketplace producer that Zelle isn't FDIC insured, that there is no protection for Venmo payments, that you can't get your money back if you send it to the wrong person. When something deals with money interaction, there is an expectation of protection because money is serious business. And so if you look at, r/Celsius, you see a bunch of people being like, yeah, but they're not going to be allowed to just disappear with our coins, right? They would get sued. Or I'm sure there's protection. Isn't the money insured up to some amount?
Not in the hedge fund. I don't think nobody will give a hedge fund in crypto insurance, right? Like who's taking that insurance? And this is where I'm just talking about these users. I'm talking about these retail users who got into this ecosystem believing this stuff is real. I think the veneer and this, polishing, making it look like a financial product, I think is one of the things that the regulators are going to come down so hard. It's going to be a massive overcorrection now. Because you've just given the high ground to the regulators. Crypto should have behaved itself. It should have regulated itself. It should have been cautious. It should have, not used these high pressure tactics. People should have spoken up with the laser eye stuff and the have fun being poor. Because if you're pressuring people like they're going to miss the boat, like, you might actually succeed. You're not succeed with me or Molly, but you might succeed with your grandma, your uncle or something because you have some credibility and you 10 extra money or you 100 extra money. If you look at the book I wrote, I'm not putting a plug in here, but I was very, very, very careful to explain to people like make the smallest, if you choose to do this and you're an accredited investor, make the smallest bets possible on your first 20 investments. If you can put $500 into each startup or $1,000, do that. And in fact, when we run the syndicate or when I had the syndicate on AngelList, we moved it to thesyndicate.com. We kept the minimum investment very low. Other people put the minimum investment at 10K, 25K per startup. I said, originally it was 1K, then 2K, then 4K. And the reason we made it 4K is you can only have 250 people in it, per deal. So we needed to have a minimum. But if people ask like, hey, can I put $1,000 or $2,000 into this? I'm just getting started. We'll actually say, sure. If there's room, we'll let you have one of the slots. And so, God, I'm just so upset that people took advantage of the public and they just made this entire shadow economy with no rules. And, now people are going to get burned. And
they were dicks about it.
Like you can say that if you want, but these guys were jerks about it.
They were jerks about it. And look, if I like come into a space and I see where all the jerks are, I don't like to go there. And so there is going to be even more schadenfreude and there's going to be even more crackdown because the arrogance, the abusiveness, the kind of like Ponzi scheme for bullying. Toxic men situation, the bullying of it, like no one is going to want to help you.
Yes, when that's how you presented yourselves. The Schadenfreude, did I pronounce that correct?
Yeah, Schadenfreude.
Schadenfreude is now coming on hard, and this clip keeps going viral, and I've been tweeting about it as well because
hysterical.
Well, I mean, it's just MicroStrategy CEO Michael Saylor.
Oh, I'm sorry. You're talking about the MicroStrategy clip. I was like talking about the Onion article that just popped up. Woo, that was a visual.
Oh, what's the Onion article?
That was a visual
Man who lost
disconnect.
Everything in crypto just wishes several thousand more people have warned him. Well played, Onion.
Well played, the Onion. This is from April.
I'm a Babylon Bee guy these days, but I'll give the Onion credit when they hit one. That's a great one. Thousands of people warned him.
If only 1,000 or even a few hundred more friends had told me about the risk of putting my entire savings into Bitcoin, I might not be where I am today, said Branton. I love the Onion.
So I saw this clip with Michael Saylor, and it's him doing an interview with Angelo Robles, who is the CEO of something called Family Office Association. Family offices are rich families. They typically have 100 million in net worth for the family, and they have to manage multi-generations, having access to this money. This has been clipped maybe unfairly to Michael, but it's important people know MicroStrategy CEO Michael Saylor has like a software company that then he got Bitcoin religion. He started buying Bitcoin from this company, MicroStrategy, which had nothing to do with Bitcoin, took out a bunch of loans to buy a ton of Bitcoin, and then essentially created a backdoor ETF, right? An exchange traded fund, because MicroStrategy's main asset is their Bitcoin holdings. So that, I don't know, I don't want to say that's fugazi, but it certainly was notably strange. And he started buying a lot of Bitcoin, and, he was one of these people who was super vocal. Now, was he toxic or was he just absurdly enthusiastic? But, I think people are reporting now he's lost $1 billion because he has some average price in the 30,000, Bitcoin price. And because he's a public company, people know a lot of these details. They're down, MicroStrategy's down 70% year to date, 74% over 52 weeks. And I thought we'd present this clip in full. It's
and then we'll do the
clip.
numbers.
So I want to just play this because I've watched various versions of this clips going around and people are editing it. But I think you have to be very careful when giving financial advice. And I talk about financial stuff all the time on this pod about angel investing. I teach a course, angel.university. I wrote a book about angel investing. I've got 11,000 people in the syndicate. I take it super seriously. I'm very careful. I'm super careful to say only bet what you can afford to lose. And if you're an accredited investor, which means you're, the top 6% of the country, Molly, I say go as slow as possible, be as informed as possible, try to be diversified. And if it was my brother, sister, cousin, great friend, I would tell them start at 1% of your net worth. And if you love it and you're enjoying it, maybe you go to 2, after a couple of years. And then if you get really good at it, you could raise a fund, but there's no race here, right?
Yeah.
You get rich slowly is always my advice. Let's start this clip.
Every dollar that's not invested in Bitcoin is dilutive to your opportunity, and every dollar that's not beating the S&P is dilutive to your wealth. And so if you really want to maximize your opportunity, you want to move as much of your liquid capital as close to Bitcoin or the Bitcoin network as possible, because it is this monetary network that's going from $1 trillion, and presumably it could be worth $100 trillion or more, because the sum total of all money in the world is maybe $400 trillion worth of stocks, real estate, bonds, and the like. Half of that is looking for a store value. And the other half, honestly, truly wants to be invested in stocks or bonds or real estate. We've lost price discovery in the financial universe. So the single most accretive way to use money or time is invest in Bitcoin, because you've got a once in a lifetime, once in 50 years, transformation where all of this $200 trillion of money sitting in analog fiat instruments is being encrypted and converted into a digital instrument, which is thermodynamically superior, right? That's the first observation. Time is money. Convert your money into Bitcoin or something as close to it as you can. And the second of time.
Let's pause there for a second. So he keeps saying, convert your money into Bitcoin or something that is as close to possible, right? He's talking about MicroStrategy, I think, his publicly traded stock, because at the time, or even to this day, it's easier to buy a publicly traded stock than it is to get a wallet and cold store or whatever and to buy your own Bitcoin, right? So he's promoting buy Bitcoin or something as close to the network as possible. I think, I can't say for sure, but I think if an attorney in a class action suit was going to launch something, the fact that he keeps saying that, if you could rewind it just maybe 5 seconds, I don't know if that's possible. And let's just play it one more time and we'll keep commenting.
Convert your money into Bitcoin or something as close to it as you can. And the second of time, well, anytime you're spending, analyzing, it's like go to Venezuela, analyze every company, every piece of real estate, every bond index in Venezuela, and figure out which ones you want to invest in. And the answer, Angelo, is it's all a waste of time, right? Everything you're doing, if you're analyzing frequencies of a minute, a day, a week, a month, that's a waste of time. If I told you I know how it all ends, right? Once you know how it all ends, the only use of time is how do I buy more Bitcoin? But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin. So what I would say is use all your time to acquire Bitcoin, finance entities and weaker currencies to buy Bitcoin, or educate yourself on why this makes sense if you're not sure. And then educate everybody around you. You know, if you're working.
Okay, let's pause.
Yeah, let's pause.
Okay.
So
go ahead, Molly.
For context, I want to say the question that was asked here is, how do you prioritize your time in a 24-hour day? And then the answer was, use all your time to buy Bitcoin.
Okay.
MicroStrategy holds 129,218 Bitcoin.
Wow, that's a lot of Bitcoin.
4,800. In all, the firm has spent $3.97 billion on Bitcoins. 4,800 of those were purchased for an average price of $44,645. They were bought over, various periods.
Gosh.
And as of right now, according to the street today, as we're taping this, Michael Saylor's bet on Bitcoin now presents a loss of at least $1.2 billion. That at least is, that's his publicly traded company. And so if you were an investor in MicroStrategy, that was the bet that you made. But I want to underscore again that he's talking to a family office association, a bunch of investors. And this is the advice that he's giving right now. Spend all of your time figuring out how to buy more Bitcoin and nothing but.
It's classic finding, if you were to define a Ponzi scheme as finding more people to buy into it,
right?
This will be looked at historically. If Bitcoin goes to $1 million a coin, he'll be looked as profit. Mm-hmm. And that was what he was thinking. Because you got to remember, in context, when he made these remarks in March of 2021, Bitcoin was trading, 59, 60,000. And so he was riding a high. He had bought in, I think as you said, like at an average of 44,000. And then he had bought more before that at a lower price. So, if you're in a year, doubling your money, you all of a sudden feel pretty confident, right? You got in before everybody. Well, how do you continue to keep this Ponzi scheme going, if you take the most uncharitable version of this? Well, you get more people involved. And telling people, the problem with this is he's so enthusiastic. He is, in fact, very charismatic. This is a multi-decade publicly traded CEO. He did have an SEC enforcement against him previously. Let's put that aside and give him the benefit of the doubt here. This is a incredibly sophisticated public market CEO and founder.
Yeah.
And he is telling people to mortgage their house, and a bunch of family office people, if they own a family business, which is how they wound up having a family office, like it could be the lumber company, from Canada, or the, people who owned a bunch of kookaroos in Texas or something. And he's telling them to take their existing business, stop working on it, put all your time into Bitcoin, and mortgage that business to buy Bitcoin. The audacity to give financial advice, unsolicited financial advice, I might add. So this is financial advice when you have a horse in the race, when you directly benefit from the advice you're giving.
All the horses.
You have all the horses in the race. I don't know what percentage of active Bitcoin he owns, but it's got to be a pretty good percentage, right? Of like, he's got a not insignificant.
150,000 out of what is going to be a lifetime total of 21 million Bitcoin.
I mean, he's got a lot. He's got a lot. Right? If there's 21 million, then 210,000 is 1%, right? So he's almost 1% of Bitcoin. But the number of Bitcoins out there, like some of these people say like a third of them are dead and in dead wallets, so nobody can ever recover them. So maybe, maybe there's, I don't know.
And all 21 million have not been minted yet or something,
a couple of million left. Yeah. So let's just say there's 15 million, that are actively circulating. He's got 1% of them.
Yeah.
So he's talking his own book, but the level of advice he's giving is so dramatic. He could have said, Bitcoin is brand new. It is high risk. I've gone all in.
Right.
I'm convinced for these reasons. Should you do this? Is a question you have to ask yourself, and you have to do a ton of research. And you should do that research yourself and come to your own conclusion. And perhaps if I was talking to a friend and they'd done their research, if they put 1% of their net worth into this and they could afford to lose it, I could understand them making that bet. I've made a much larger bet, but I am a high risk taker, and you need to make your own decision. If you see any videos of me on the internet talking about angel investing, I give a disclaimer like that all the time, every time. But he does something so sinister in this video, which he actually tells you to not do research because it's a waste of time.
Yep.
You go to Venezuela, you can study all the companies and then place bets, and you realize it's a whole waste of time. He's literally saying, do not do research on the thing that I bought before you. And when you buy it, I benefit. This to me feels like this video is going to launch when it goes viral, because it's only gone viral amongst us. But this video will go viral when Bitcoin hits 10K or whatever the bottoming out here is.
Yeah.
And it's going to result in a class action lawsuit because all an ambulance chasing lawyer needs to do is find one person who saw that video and bought Bitcoin at 60,000 to launch that class action suit. And, this is just disastrous. It's disastrous. And I'll be honest, it's unnecessary and gross. You don't need to be this toxic with people.
Well,
if you have that conviction,
right?
It feels like, it's deranged.
This is not even, right. This is not advice. This is no longer financial. I mean, if you look at his Twitter feed, it's clear that this is really like fundamentally religious. His pinned tweet alone. Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy.
Okay. I don't know what he smoked when he wrote that.
Look at his profile picture. Pull up the profile picture.
It's beyond laser eyes. He's now gone full listen, I get that it's a bit, but it's a bit with 150,000 Bitcoin bet behind it, combined with giving financial advice, right? So if he said, I believe this, you have to come to your own conclusion. This is religion to me. I believe that this is going to change the world forever. I get it. I'm totally fine with that.
Yeah.
It's just that when you start giving this kind of detailed financial advice, don't do research. Buy some Bitcoin or something close to it. MicroStrategy. He doesn't say it. So he's kind of leaning you towards it in my interpretation. I could be wrong. Maybe he means something else. But it's giving out like cult-like vibes.
Yeah.
And Ponzi scheme-like vibes. And that's fine if it's going up. He looked like a genius when it's going up. And we don't know. The story is not told. It could become a global reserve currency. It could become worth $1 million a coin. But that doesn't forgive this level of behavior. And this is something that a regulator, the SEC, class action folks are going to have a field day with in the event of a collapse. And, is this a collapse? It's a correction for Bitcoin, but it kind of feels like we're teetering on complete collapse here.
Yeah,
80%
really
drawdowns happen. 90% drawdowns happen. Talk to Peloton shareholders.
Yeah. Yep. And I mean, liquidation events are happening in near constant real time at this point. This feels like, go ahead.
I feel like this person is like, God, how do I say this? I don't want to diagnose somebody from afar, but this feels like he's manic, right? I know people who have had manic episodes, and it feels like a mania when he speaks, right? Like it's so intense and it's so convincing that a person who wants to be part of something, I could see, 5 or 10% of people who watch this video actually getting convinced. And it's just when you start having any level of notoriety or power, you got to be careful. You just got to be careful with this stuff. And this feels like he's directing people to make a bet that benefits him, to not do research, all this stuff put together.
Yeah. I mean, I think it's hard to leave aside the fact that if you are predisposed to kind of this cult-like thinking, for whatever reason, that this is exactly the thing that's going to draw you in, especially, and this is important to point out, that at the time that he was talking, Bitcoin was at $60,000. That had gone from literally zero, did not exist, to an asset in which a single digital coin was worth $60,000. So like there had not been a historical reason to think that it was going to do anything but that. And I do think that when you look at Jack Dorsey and the look on his face when he talks about decentralization, right? Like there is a Venn diagram of wanting to believe in a whole new thing and the power of invention and innovation, and this, arrival of this potentially earth-shattering technology, like that I think draws you in and makes you lose your mind. It's just like it becomes dangerous when you're leading a public company in that direction, when you become the false prophet for, these family offices that control, what is it, $6 trillion globally?
Yeah. I mean, who knows how many of them are there, but yes, real. Family offices are,
it gets real.
He's going to a family office conference. These are people who could place $10 million bets, $100 million bets. These are people who place those bets. These are the people who will put money into a venture fund.
Like Archegos is when Archegos collapsed, we saw the size of the family office industry, which is largely unregulated, and they're bringing in David Koresh to tell him to put everything into Bitcoin. And it's a little scary.
Yeah, and listen, I wouldn't call it manic if there was some consideration here or some disclaimers.
Right.
But
there's nothing.
There's not only is there nothing, he is egging people on to mortgage their homes and mortgage their businesses, and listen, I get it. Like, it's fun to buy NFTs and all this stuff, but you just got to use some common sense here. And I am a big fan of people being able to do what they want with their money. I think the accreditation laws should be changed. They're in the process of being changed. I've been very public about this. You should have a test. And if there was a test that you took that was, 75 questions, and, they had to do with diversification and Ponzi schemes and, what bonds are and what, equities were, how equities work. And you just had to take a test, and maybe it was, twice as hard as a driver's license, something in that range. Maybe what a gun test should be. Something where you really have to show that you read the book, like a scuba diving test, right? Are you PADI certified, Molly?
No. Okay.
So I did PADI certification. You got to read a book. You got to do 3 or 4 open water dives because you could die because you're underwater. This could be, the risk of ruin is here for families. So why not let people take a test, get a financial driver's license or a PADI certification to be a diver. And then when somebody comes out like Michael Saylor does here and is egging people on to make a bet on an untested, unregulated, distributed fad like Bitcoin that could turn out to be something very real and a great investment, you at least have some backstop, right?
I mean, you should just, the basics never change. And that's, I also think, I don't blame the retail investors who got sucked into this and now are astonished, right? Or who watched these videos and were like, what? These are the smartest people in the world who control tons and tons of wealth. Why would I not believe them implicitly? Because it is very hard to hold on to fundamentals in, a hurricane, which is what this was.
Yeah. And who knows? Bitcoin could recover. It could go to 100,000 and he'll look like a genius. And this video clip will look like, oh my God, we didn't get it.
Yeah.
I freely admit, Bitcoin could go to $1 million. I own Bitcoin.
Definitely.
I'm hodling Bitcoin. I do think that it's a real technology, but man, this is just so
it got
gross.
It turned in anytime anything turns into a cult, be wary.
Yeah. Be wary. And people talk their books, I'm always very careful. I'm like, listen, I still believe in Uber. I still believe in Robinhood. I still own the shares. I tell people, and if I were to liquidate my positions, I would tell you, right? So when I say, hey, listen, I think Uber's undervalued. I think Robinhood's going to be a great company. I'm holding for 10 years. I tell people that. And I say, you can look at my replies. People are like, oh, what about Robinhood? I'm like, I plan on holding Robinhood for a decade. I'm not going to bail on a company I think is incredible. And just because, they have some things to work out or whatever. They didn't get to 20 million users by accident. I still believe in the company. I still believe in management. I still hold in the shares. Haven't sold a share there. I did liquidate part of my Uber position a while ago with Masa early on. I am keeping the rest of my position because I believe in the company. But I'm not telling you to buy it.
Or mortgage your home for it.
Or more. I mean, come on. And if I did listen, if somebody asked me, like, do I think Uber's undervalued? I say, yes, I think Uber's undervalued. Do I think it's going to be worth 10 times as much? Yes, that's why I'm holding it. You should do your own research. You should, take an Uber. You should use the product or service. You should watch interviews. Do your research. And he's telling people don't do research.
Yeah.
That's the part that makes me super pissed off about Michael Saylor.
Yeah.
Is that he told people to not do research and to mortgage their homes. So anyway, it's important you all see that. The Celsius network withdrawals are still paused.
Yes.
These are the people who are giving some huge amount of interest on crypto deposits. So you give them your crypto. They give you 18% or something crazy like that. We could never figure out who was paying the 18%. Company had 1.7 million users before it paused the withdrawals. Who knows what's going to happen with them?
$12 billion in assets. Managing almost $12 billion in assets, and no one knows what's going to happen. They are apparently seeking, talking to bankruptcy lawyers was, I think, the last I saw, trying to figure out how to restructure.
Yeah. Or taking on a strategic investment. Who's
taking on a
that
street,
bet?
right. So this is according to the Wall Street Journal as of today, has hired restructuring attorneys from law firm Aiken, Gump, Strauss, Hauer, and Feld, LLP, to advise on possible solutions for its mounting financial problems, according to people familiar with the matter.
Yeah. Crazy.
Massive. But listen, this could all end up being moot.
Yeah.
Because the aliens are here. Did you see this story today?
I saw this story last night, and I was, when you're going to bed and you're trying to get off the doom scrolling?
Yeah.
And then the simulation, because we're in a simulation, I'm convinced now.
Oh, 100%.
It's just obviously a simulation.
100%.
Because right as I'm ready to go to bed, I got a massage yesterday. My wife forced me to get a massage because she thought I was under a little stress. And so I was like, okay, I'll get the massage. And it was lovely. And I'm not even into that. And then I'm like on the bed. I'm like, I was watching that show on HBO, Hacks. I'm enjoying the show Hacks.
Oh, yeah, that show's funny. Yeah.
Yeah. So I'm on season 3 of Hacks. And it's just lovely. These 2 comedians, and one's older, one's younger. It's just great. It's really I think it's underrated show, Hacks, season 3. I highly recommend it. So I get through 2 or 3 episodes of that. I got Obi-Wan tonight. I'm about to fall asleep. And then I see China finds aliens. And I'm like, really? Simulation?
We're done here.
Can I get any bet? Can I get any sleep? And you know what? I refuse to double click on it. Then I get to our chat in the morning. I see the producers. It's in Bloomberg because I saw it on some Fugazi website.
It's in Bloomberg. It's in USA Today. It's my kid, of course, came running upstairs. He was like, now we have aliens. We're doomed. So this is the only reason this is in the lineup.
Make me smarter, Molly.
Exactly. There are 2 reasons this is in the lineup. Because 1, if it turns out to be true, we do not want to be the show that walked by it.
Okay. Yes.
We're not buying it. But 2, really interesting technology story. Okay. So the story is China's science ministry said that its giant telescope, and China apparently has the world's largest radio telescope, which I did not know, said its giant telescope may have found signals from alien civilizations. The signals were identified this year by its 500-meter aperture spherical radio telescope known as Sky Eye. The narrow-band electromagnetic signals detected by Sky Eye are different from ones previously captured, and this team is still investigating them. According to Bloomberg, though, the report then had been posted on the website of the Science and Technology Daily, the official newspaper of China's Science and Technology Ministry, and then it was removed. Kind of like COVID.
Yeah. I mean, I was talking about this earlier.
I'm just not walking by it. I just want to plant this stake right here and be like, yeah, we saw it. So that when it turns out to be aliens on the way.
I think this is worth investing in. I'll be totally honest. I know we got a lot of problems on Earth, but we're not going to be here much longer, Molly. You and I are on the back, 9.
We're on the downswing.
We're on the downswing here. I have no illusions about the fact that I got between
good,
1. We look great.
It's coming.
We're looking great. But we're healthy, all that stuff. But we have between 1 day and 30, 40 years, 50 years, it could be good. But this satellite, this China, dish here looks pretty good. I think we need to build one that's 10 times bigger. Because before I
yes,
die,
though.
I sincerely want to know where the aliens are. And the clock is ticking. So I know it's a waste of money and we got like a lot of other things to work on. But I think we should be going all out to find, all in on finding more of these aliens. I want to find out. And even if we never know, the fact that we know there's somebody sending a signal, to me, that would be lovely. I think it would change humanity's view of the world, right? Give us some purpose. Like, okay, there are other alien life forms out there. We can meet them, and there could be a lot of upside in that. Or they could fry us and eat us.
I'm 100% on the Stephen Hawking train here. And I love that trilogy, the Three Body Problem trilogy by Cixin Liu. And the book, my son and I were talking about this actually when I took him to work this morning, the idea of the dark forest. Like if you're in a dark forest and you don't know what's out there, but you assume there are probably things that are out there that can kill you, are you going to light a fire and be like, I'm right here?
Yeah.
Or are you going to shut the hell up?
Yes.
And try not to die?
Yeah.
And Stephen Hawking was of the opinion that we need to shut the hell up and try not to die, because if there are aliens marauding out there in the world, it's most likely because they're looking for resources.
Yeah.
That's what we did as a species.
Sure, it makes sense.
When we expanded across the globe, it was usually because we're like, oh, we need this and we need that, and we'll kill whatever is there and take it. It's not shut the hell up.
But if you hold on, I have a counter argument to that. I don't know the whole body of science out there, and I only got into the second Three Body Problem audiobooks. I got to pick it back up. But here's the thing: if you are that scientifically advanced to get across the universe, it would follow that you would have the ability to create resources, because it's going to take a heck of a lot of resources to get across the universe, and we're already at the point of not being resource constrained on this planet, like, fusion, renewables, water, like desalinization.
I mean, we are talking about mining the moon because we need some metals and minerals that we're having a hard time finding here.
Yeah, it feels opportunistic. It doesn't feel like, but I mean, if we could get to another planet like ours, another Goldilocks planet.
Yeah.
The amount of resources it takes to get there, by definition, would mean that we have unlimited resources, I think. So I'm going to go with we're good.
You're an optimistic guy. I'm
optimistic.
We're good.
Yes.
We're
good. If I'm not, it is what it is. Okay.
If we're not, then go in the first wave.
All right. So we'll wrap on that. There's either good news, or the Chinese are lying again, or it's the end of days.
Or like both, maybe?
Or the simulation is just, the whatever 12-year-old girl is like running this simulation.
She's not tired right now. She's tired.
She's having the time of her life.
She has a lot more ideas.
She's got a lot of ideas to. She's like, let's see if a reality star could run everything. Oh, how about 100-year pandemic? Let's crash the market. Let's make an imaginary currency. It's just like, please stop. I liked it better when it didn't move. She's literally going to be like, what if Russia and China both started a war in the same year? Like this Taiwan stuff, like, oh. Anyway, stay focused, everybody. And we'll be here for you every day at 10 a.m. YouTube.com/thisweekend. And
we'll see you tomorrow. We've got a lot of fun things going on. We got a lot of new guests coming on. We're going to be having some interesting interviews coming up on This Week in Startup soon. And then, of course, don't forget about this Angel University.
Yes. Angel University is happening. Go to angel.university. It's happening in 2 weeks. So if you want to learn how to angel invest in startups and do it with like a real good methodology and not mortgage your house and do it thoughtfully.
I'm going.
Come. Oh, you're going to go. Great. Awesome.
Yeah, absolutely.
Maybe you can help us with the Q&A at the end. Angel.university. All proceeds go to charity. On the angel.university site, we have a list of all the charities we've given money to. And I think it's over 150 or 175,000 we've donated. So all the proceeds, we don't make any profit from this. We just pour the profit into donations. But we do like people to pay for a ticket so that they don't burn the seat at the Zoom call. So it's virtual as well. We'll probably do them in person at some point. And as we wrap here, we had the breaking news of the 0.75 interest rate. Happened
Markets
today
were
from the Fed.
All over the place as we were talking. But the Fed is being super aggressive. And then there's an updated estimate Wednesday from the Atlanta Fed
Okay.
on whether we are or are not in a recession. A recession, of course, being defined as 2 straight quarters of negative growth. Right now, the Atlanta Fed is saying Q2 is flat, not negative.
Oh, so we may have just dodged a bullet, maybe technically. And they usually use, I hear some people saying a recession also has to be that we don't have jobs or people are losing jobs and there's an employment issue. But I've never heard anybody give a specific definition of that. Like, unemployment is above X percent, or, the number of available jobs is below X percent. So if somebody can inform me about that definition of a recession or that caveat to a recession, please email us, producers at thisweekinstartups.com.
Exactly.
I keep hearing people on CNBC talk about unemployment in relation to the definition of a recession. But that is something we knew was a possibility, that it could be a flat quarter in terms of GDP. So that would actually be good news.
Yeah, I'll take it.
Yeah, we'll take it.
Markets are green as we wrap, so we better go. Goodbye.
We'll see everybody tomorrow. Bye-bye.
Bye-bye.